Welcome back to the Longacres Finance channel. Today I will be taking a closer look at a company with an above-average growth history that is unfortunately having a pretty bad year in 2021. I think right now is a good opportunity to pick up some more shares of this stock that is poised to offer above-average future returns. The stock I am talking about is MasterCard, ticker symbol MA. Let's take a look at what's been going on with the company and where it can go from here. First off, we have to take a quick look at recent performance. Over the past 6 months, MasterCard has returned only 1.55% to investors, while the S&P offered a return of 13.41%. This is some pretty bad underperformance during the course of the last 6 months. If we zoom out and look at the year-to-date performance, the picture doesn't get any better. MasterCard is up a meager 3.54% as of today, while the S&P has a return of 26.71%. The year didn't start out too horrible, but sometime during midsummer, shares of the stock cooled off, even dipping into negative territory for a while. Investors would have been about 7.5 times better off placing their money in the S&P versus MasterCard this year. But this isn't the case for long-term investors. MasterCard has been crushing the S&P during the last decade, giving investors nearly triple the return of the index. Looking at the past 3 years through September of 2021, MasterCard is beating SPY by 0.71% per year. Moving out further to the last 5 years, the gap widens to 11.8% alpha for MasterCard. During the last 10 years, the gap is about the same, with 11.24% annual upside over SPY. And if you were fortunate enough to pick up shares of MasterCard when the company went public in 2006, and held on to those shares till today, you would have enjoyed almost 23% of annual outperformance over SPY. Earning an annualized rate of return of 33% over a 16-year period is a phenomenal achievement. It would turn a $10,000 investment into over $800,000, while SPY would have barely multiplied your investment 5 times. I think the recent slump for the stock presents us with a unique opportunity for higher future returns. While the stock has already regained some of its recent losses this month, I still think today's price is very reasonable for this cash flow machine that rarely goes on sale. Let's take a look at the fundamentals for the business, and then I'll make some forward-looking assumptions. Revenue has increased year over year during the last decade, with the exception of 2020, when the pandemic hurt MasterCard like many other businesses. But the recent Q3 earnings figures have already surpassed pre-pandemic highs. In total, revenue grew from $6.71 billion in 2011 to $17.79 billion in 2021. That's an average growth rate of 10.24% per year. Analysts are forecasting top-line revenue to continue growing at fast double-digit rates over the next few years. Earnings per share growth has outpaced top-line growth, expanding at a rate of about 20% per year, even accounting for the flat earnings between 2016 and 2017, and the almost 20% drop last year. Analysts are forecasting this high earnings growth rate to continue, at least for the next 5 years. MasterCard has been paying a dividend since 2006, but the company started to consistently increase that dividend in 2012. This means that the 10% dividend increase for 2021 was the 10th consecutive year of dividend growth for the company. This also happened to be the smallest dividend increase during the last 10 years. The company has exceptional long-term dividend growth rates of 20.74% during the last 3 years and 18.29% during the last 5 years. The last dividend increase of 10% was actually announced almost 1 year ago, in December of 2020, following a very poor year for the company. They should be announcing their next increase for calendar year 2022 a few weeks from today. I think we can expect to see a strong increase in the high double-digit range. Comparing MasterCard's dividend payments to its earnings per share, we can see a pattern of a slowly increasing payout ratio. However, even with the slump in earnings last year and continued dividend growth, the payout ratio remained at a very low rate of 25%, which leaves plenty of room for high future dividend increases. I am forecasting an 18% dividend growth rate for MasterCard over the next 4 years. That is slightly lower than the analysts' forecasted earnings growth. This would keep the payout ratio below 20% while offering significant cash flow increases to shareholders. MasterCard has never been an attractive dividend stock, in the sense that the dividend yield for the company is not exactly appealing to many dividend investors. I consider this stock more of a total return focus with some passive dividend income on the side. If you can hold on for a long enough period of time, you may end up with one heck of a yield on cost. But I wouldn't count on receiving a high dividend yield from MasterCard anytime soon. Looking at the dividend yield for the last 10 years, it has never even come close to 1%. The current dividend yield hovers somewhere around 0.5%, and the most attractive yield ever offered was in 2016, when it reached a high of 0.82%. Currently, I am showing a dividend yield of 0.49%, based on a $359 price for MasterCard. Compared to the 5-year trailing dividend yield of 0.55%, the share price looks to be about 11% overvalued right now, with a fair price of $320. MasterCard very rarely goes on sale, and there really weren't very many opportunities in the past to pick up shares at attractive prices. Earlier this month, the share price dipped all the way down to just below $330, which was an even better buying opportunity than today. I actually picked up some shares on November 2nd in my personal portfolio. I think even with today's higher price, the stock still presents a good opportunity going forward. MasterCard is a very solid business that will keep producing high levels of cash flow well into the future. As such, I think there is a disconnect between fundamentals and the lackluster price performance this year that should be corrected in the coming years. MasterCard along with Visa pretty much dominates global payments, aside from China, where UnionPay is the leader. Electronic payment volumes are growing globally as there is a continuous shift away from cash and checks. MasterCard, as one of the two main global players, enjoys an advantage from their current wide payment network. This business model is also very scalable, with a largely fixed cost, meaning that bottom line growth can exceed top line growth. The pandemic was a minor hiccup in growth for MasterCard, and I think the post-pandemic changes only stand to benefit the company, with the main change being an accelerated transition to electronic payments. If we take the average forecasted earnings per share growth rate of 22.64%, and we assume it will correlate with future share price appreciation, MasterCard is poised to offer a very generous total return over the next few years. Combining the earnings per share growth rate with the current dividend yield and a potential return to fair value that would result in a 2.09% drag on total returns, we are still left with a very strong 21.04% annual total return forecast. I would personally be content with a 12% long-term annual total return for my portfolio, which means that MasterCard's forecast offers a good chunk of margin of safety above my expectations. The stock has appeared on my high-growth dividend watch list for 14 of the last 15 months, because the company continually ranks very well in my quality and growth metrics. I have been building out my position in the stock over the last few years. As of right now, I own a little more than 5 shares of MasterCard, with the market value around $1,900. The stock is the 22nd largest position in my portfolio, with a 1.6% allocation. My current position is forecasted to generate $9.09 in annual dividend income, which accounts for 0.46% of my total forecasted annual dividend income. Let me know if you own MasterCard in your portfolio in the comments below. If you enjoyed the video, please hit the like button. It will really help out the channel, and subscribe so you don't miss future content. Thank you for watching, and see you next time.